As you are well aware, huge market swings making investors aware of the markets entirely. In fact, Cambria Investments Chief Investment Officer Meg Faber saying forget stocks and bonds entirely, go 100% into cash. Well, alternative investments expert Jason Schwarz isn't so sure about that. Jason, great to see you.
As well.
So if you look at the market internals and the money flows, you have seen this week some swings into classic safe havens, gold and treasuries, but really nothing to suggest that it's a risk-off day. So you have to wonder, are people putting money under the mattress?
Right. And that's right. And I think the question is, investors of all stripes, big institutions, individuals are understandably concerned about volatility. That type of a radical kind of market timing approach, really any type of market timing approach, in our perspective, is not the most prudent way of managing risk. Keep in mind, for any types of major swings or changes to a portfolio, you really have to be right twice, on the way out and then on the way back in. And so, if you think of the way institutions manage money and think about, investing in a lot of different things, stocks, bonds, and alternatives, that, move to 100% cash is generally not thought of as
why would a noted and respected advisor say cash out completely?
Yeah, I think there's a lot of different models. I think that's a tactical model. It's a paper-based model, as I understand it. It's not, actually running money. I think it generates headlines more than it generates investment results for investors.
So in your allocation pie then, in these days, in these volatile days, if you're an average investor,
Sure.
just off the top of your, what do you think your percentage in cash should be right now?
Sure. Cash is not a strategic asset class in our perspective. So, unless you're saving for a house or a vacation or something like that, cash isn't going to earn you any money. Cash is the ultimate way of essentially inoculating any risk. So you want to be invested in equities. You want to be invested in bonds still. You want to think about the level of risk, but you also want to think about alternatives, as many of the big pension funds and other institutions do.
All right, so CalSTRS is obviously in the news. It's significant. I think you said it's the second largest pension fund in the country, right? Just announced that it's really going to put an emphasis into some alternative investing and away from stocks and bonds.
That's
so what was behind that move?
Yeah, right. So it's risk mitigation, and they actually talk about this bucket could be up to $20 billion. So 12% of their portfolio in the types of investment strategies that don't behave just like stocks and bonds. And that, I think, is the key message. And with the major amount of liquid alternative mutual funds now available to individual investors, individuals can now get access to these types of hedge fund strategies that historically only big institutions like CalPERS were able to get to. So you want to be in stocks, you want to be in bonds, and you want to be in these types of strategies that reduce risk but still allow you to make some money.
And that's great news that average people are going to have access to that technology, especially considering these volatile swings. It's painful if you're not following it day in and day out to just wonder quarterly what's going on with your 401k plan.
Absolutely, and that's good news. And so it's a more democratic way of leveling the playing field, and so we're real hopeful there.
Great to meet you. Thanks so much for coming in, Jason Schwarz.
Thank you.